growth categories like collectibles and pre-owned businesses. Looking ahead, we have two overarching priorities: achieving profitability in the near term and driving pragmatic growth over the long term. Now that the necessary investments have been made and we have identified the aforementioned opportunity set, we're going to be very judicious with respect to how we allocate capital to the core business. Maintaining a sizable cash position will maximize our optionality and keep us strong against a challenging economic backdrop. If a strategic asset or complementary business becomes available in the right price range, we want to be able to explore those acquisitions. As a result of these steps and our planning, we believe GameStop is well positioned heading into 2023. We stand to benefit from our strong cash position, lack of debt, healthy inventory mix, shrinking cost structure, and disciplined focus on categories where we have competitive positioning. We are also fortunate that the company's exposure to digital assets has been very modest thanks to risk management efforts. The company has proactively minimized exposure to cryptocurrency risk throughout the year and does not currently hold a material balance of any token. Although we continue to believe there is long-term potential for digital assets in the gaming world, we have not and will not risk meaningful stockholder capital in the space. Let me now turn to our financial results for Q3. Net sales were $1.186 billion for the quarter, compared to $1.297 billion in the prior year's third quarter. Approximately $50 million of the decline is attributable to FX. Sales attributable to new and expanded brand relationships remained strong. Likewise, sales in the collectibles category remained strong on a year-to-date basis. SG&A was $387.9 million, or 32.7% of sales, compared to $421.5 million, or 32.5% of sales in last year's third quarter. Notably, SG&A as a percentage of revenue was down on a sequential basis from 34.1% in Q2 of this year. We've also taken additional steps in recent weeks to further reduce SG&A on a go-forward basis now that significant improvements have been made to the core business. We reported a net loss of $94.7 million, or 31 cents per diluted share, compared to a net loss of $105.4 million, or 35 cents in the prior year's third quarter. As with SG&A, we saw a healthy reduction in our net loss on a sequential basis versus Q2 of this year. Turning to the balance sheet, we ended the quarter with cash, cash equivalents, and marketable securities of $1.042 billion. We continue to maintain a strong cash position while sustaining strong in-stock levels for the busy holiday season. With respect to inventory, we have strengthened our position in recent months by divesting a small percentage of merchandise that was acquired late in 2021 and early in 2022. Divestitures occurred in categories seeing soft customer demand over multiple quarters. Inventory was $1.131 billion at the close of Q3, compared to $1.141 billion at the close of the prior year's third quarter. At the close of the reporting period, we had no borrowings under our ABL facility and no debt other than a low-interest, unsecured term loan associated with the French government's response to COVID-19. Capital expenditures for the quarter were $13 million, up $0.5 million from last year's third quarter. We anticipate CapEx will remain at similar or reduced levels now that the company has largely completed its period of heavy investment. In the third quarter, cash flow provided by operations was $177.3 million, compared to an outflow of $293.7 million during the same period last year. In terms of an outlook, we're not providing formal guidance at this time. It is worth reiterating, however, that our goal is to achieve profitability in the near term. I want to finish by reiterating what we've said in the past. We're attempting to accomplish something unprecedented in the retail sector. We're seeking to transform a legacy brick-and-mortar business that was on the brink of bankruptcy into a retailer that meets customers' needs through our stores, e-commerce properties, and emerging sales channels. This path carries risk and is taking time, but it is the path we are on. With that said, GameStop is a stronger business today than at any time in the recent past. I'll leave it there for this quarter. Thank you.
This concludes today's conference. Thank you for your participation. You may now disconnect.
Well, that was very abrupt. I was expecting there to be at least a little bit more than that. Like that was super abrupt. All right. Well, let's do some analysis on this because now the results are in. We can actually talk and think about this. First of all, how's everybody doing? Sorry that I was very late getting this set up. I am like scrambling all over the place. Recording software is not as cooperative lately these days. But yeah, that was ridiculously short. No Q&A section or anything. That's really weird. All right. Well, let's go ahead and take a look at their past finances and then compare to what GameStop's situation was last quarter. So their profit margin has been improving. Let's see. This the latest? Or did TradingView not get the... No, TradingView hasn't updated their sheets. Let's go see. Let me see if I can find a more presentable way to represent this information. Okay. Okay, so the NASDAQ estimate from the company guidance showed that they were estimating a loss of 38 cents per share, and they reported a loss of 35. The ZAC estimate from Wall Street was all the way up at a loss of 32 cents. So that is Wall Street had bigger expectations. Like when did they not? And that is based on the July report. If I pull up TradingView, pull up these financials. So this quarter, for the period ending October 22nd, they had a loss reported of 21. The ZAC estimate was a loss of 27.7. And revenue reported was 1.186 billion when the estimate placed it at 1.345 billion. So all around, GME missed the consensus forecast. We're not going to get all of the information out from their latest onto TradingView yet, but I am going to go and look at some of their statements from the past and use that to give us some context for what our expectations should be and see if we can suss out the positives and negatives. Yeah, I hear you guys. That short, that was like a record short earnings call. It was a ridiculously stupid short earnings call. So I'm gonna actually we're gonna go into full on analysis mode now and start looking at all the details. All right. So free cash flow from financing. Okay. I'm gonna go look at their balance sheet really quickly. Their liabilities have been coming down quarter over quarter consistently since Q3 of 2021. Very good setup. They've been working really hard on reducing their debt. Their net debt has gone from a staggering 1.06 billion all the way down to 306.5 million. So they're doing a phenomenal job reducing their liability. It's taking them a little bit of time, but they are doing a great job getting that debt down. Most of the liability that's sitting here is based on shareholder equity value. So think of things like convertible notes and bonds and things like that create debt, air quotes, for the company. But that's considered to be healthy debt because the company is insuring a investment through bonds of its company, or a convertible note, something that gives the creditor something with equity value that gives them a stake in the company. Dennis, I'm so sorry, dude. This is going to be reserved just for GameStop. But we do have some information coming out on BBIG this afternoon. So stick with me. I'm going to have a video published later on this afternoon with TA on BBIG. I'm so sorry to hear that, dude. But I'll get you some information later this afternoon, I promise. Okay, so the book value of GameStop quarter over quarter has been improving. And that's this is one of the hidden gems of this company. Book value at 17.6% as of Q2 of this year is a really good sign. What this is essentially saying is that the equity value of the company, the total equity value versus its stock traded market price, and and their book value or their balance sheet value is positive. And a low value, you want a low value when you're buying, but you don't want it to be too low, if that makes sense. Like a book value of 5 is 5 or below is pretty bad. But if you go like above 5 and up to 15, that's a value purchase, technically speaking. Because if you see good value in the company, but the book value is very low, that is what kind of hints you or points you into the direction of a value play. And GameStop is one of those companies that has a lot of hidden value because of all of their, physical assets, their property, and things like that. And them switching over to becoming an online retailer is giving them a lot of hidden value because they can move a lot of product really quickly and get it to local markets. And of course, there's like the nostalgia and also event planning and stuff like that. So GameStops are like a really common hangout for people that just like to come hang out in the store and play video games. Okay. I promise I'm almost done looking at the details. Oh, they do have the earnings report listed here. Okay. All right, cool. So yeah, you can see that Q4 is like the big expectation, right? Q4 estimates are all the way up at 2.4 billion. So this is the season where everybody starts buying all their Christmas gifts for their kids. So all the revenue that's going to be generated since late October all the way through November, December, and January, that's all going to get reported on Q4 earnings. And I'm pretty sure that those are going to be delivered sometime in March or April. I believe it'll be delivered no later than April. But these earnings are what are most important for GameStop because if we see the growth trajectory for GameStop shoot up this season with all the new titles coming out in the gaming industry, this is where you will see them making their real money. And if they can take that cash that they're generating from, big events, the Christmas sales and the Black Friday sales, those are going to be the numbers that really cause GameStop to shoot to the moon. Okay, so I'm going to look at some of these reported numbers. Yeah, the losses got really heavy in mid 2021 and early 2022, but they're back on the recovery trajectory now. So nice, healthy improvement. I like seeing the direction that this is taking. The forecast, I don't put too much stock in that. The revenue forecast, I believe, because that's on trend with everything else. And even during height of COVID pandemic, they still beat on their Q4 earnings. And any way you slice it, gaming is still a really popular industry no matter what. Well, remember, Neil, that the market cap of GameStop is well, it's still a value play in that GameStop was before this all went down. Yes, I agree that it was easy to justify a buy when it was trading all the way down here. But now GameStop has transitioned almost fully to becoming an online retailer, which is the same thing that Ryan Cohen did when he switched over Chewy and turned that into an online retailer, like completely changing it over from being a pet store to an online retailer. That's what gave GameStop. That's what will give GameStop a lot of its value, is that transition. Because I think that managing this very specific industry and tailoring this specific industry or this specific company to the industry of gaming is what can give it that value that I believe is hidden beneath the surface. The earnings were not really great, but they're still on the right trajectory. This just wasn't the season for it, because now we're finally like in the whole recession fears, and this is the earnings. This is part of the earnings contraction period that we were expecting everybody else to have. Most of the other companies, like the big 10 on the SPY, like Tesla, Microsoft, Google, Twitter, Amazon, all of these big stocks, they all reported terrible earnings for Q3, and GameStop's no exception, because one, that's not the season for big title game releases, so this earnings was not really surprising to be that bad. Two, everybody else's earnings were absolutely god awful. GameStop's were just like, it was just, it was a little disappointing. Sorry, I had to go ban a miscreant. You're banned. Okay. So, after reviewing the finances, let's go take a look at some of the technicals. I'm just going to briefly cover the weekly, daily, and some of the short-term technicals for GameStop. Where we're currently trading at, GameStop is essentially set up for yet another bottom. The way I would describe this setup is GameStop has been kind of like in the sideways channel for quite a while. So let me go clean some of this up a little bit. It's a little messy. That's way better. Okay. So this bottom that we've seen GameStop touch before is pretty consistent, consistently very close to a bottom. In order to see a triple bottom, what we would have to see is the candlestick, which you can see is already entered into this area. At any point that this candlestick that we're currently trading on the weekly, if it enters into this zone and then finds a new level of support above this line, and then as long as it closes above this area, then we are in good shape for a triple bottom based on this, and wherever GameStop closes. I realize that leaves a big gap because that's almost $3 difference between the current traded stock price. But fundamentally speaking, or at least technically speaking, I should say, that is a setup for a triple bottom. And what you'll notice is that every time that there is a bounce off of those levels, GameStop spends the next week ripping, just absolutely taking off. So buying in this area is not such a bad thing. Like, I know that everybody really hates it, watching the price get smashed so badly like this, but these are buying opportunities where you can scalp a good trade. So taking in some calls for at the money or near the money for a couple of months out, and then just taking profit when you see GameStop do this little number, just take off, capture your profit up above $32, and then wait for them to smash it again. It's just kind of what they do until fundamentally the company completely resolves its debt situation and fully makes the transition to an online e-retailer that has a proven business model. That's when you're going to see GameStop truly begin to squeeze. Or at least that's when you would see that it would have the chance to squeeze. And I'm speaking on this just purely speaking to the fundamentals and the technicals. This has nothing to do with calculating in naked shorting or market manipulation on the part of hedge funds and market makers. That stuff is still in play, but it's not something that we can analyze very reliably here with the charts in front of us. What I can do for you, though, is I can cover what our ScourgeBot finds. So if you guys will just give me a moment, I'll go and jump over to that and pull up some of the ScourgeBot details on GameStop. And you might find something very interesting. I actually have something pretty massive to share with everybody on GameStop, at least. So bear with me for just a little bit. Okay. So this is a little bit of data that we got from ScourgeBot, which is Hell's Trading Floor's own internally developed stock analysis robot. Is built right into the Discord. Members of our highest tier of supporters are allowed to use this directly. And this chart, what this is showing you is essentially a gamma ramp visualized. And if you're hearing this term for the first time, gamma ramp, then I'll quickly explain. A gamma ramp is created when a very large amount of call options are opened up in succession of strike price. And if you're not familiar with options, this is going to require a little bit of research on your part. But basically, every single strike or every single price level, think $10, $11, $12, $13, and so on. Every single one of those price levels is a strike level. Okay, that's the strike price. And the purpose of a call option is you are buying a call option to buy a stock with the right but not the obligation to buy a stock at the strike price, right? So when you think of somebody who buys a call option, they're paying for the right to purchase 100 shares of GameStop in the future at a specific strike price. When you have a lot of people that do that and they ladder up those levels, I'll quickly draw this out and sort of illustrate this for you. Say that we got a whole bunch of people that bought calls at that have a strike price of $23 and $24 and $25. Each of these lines represents a strike price. And say you got 10,000 calls at each of these levels, right? You got 10,000 calls here, 10,000 calls here, 10,000 calls here, okay? That creates a gamma ramp, because for every single one of these prices where the stock actually goes up to this level, if the price goes up to here, then that means that whoever sold those 10,000 calls, they're going to have to give up their shares to whoever bought those calls. So you have a whole bunch of guaranteed buyers at that level that are sitting on all those calls that they purchased. And whoever sold those calls is going to be forced to deliver. Now, who sold the calls is the question. A lot of times you have investors who are selling covered calls. That's when you hold on to 100 shares of stock. So you sell a call with the intention to just, keep generating income by selling that premium. And that's traditionally how you make money. But you also have market makers that get involved, and they sell naked calls. That's a call that you sell without actually owning any shares to cover that call. So what happens if the price goes up to here is suddenly the market maker needs to go out and go buy enough shares to cover these calls. And that actually amounts to 1 million shares. If they sold 10,000 calls, that's 1 million shares of GameStop that must be covered, right? And in the course of doing that, as they buy that can cause the price to go even higher, and it can hit the next level. And suddenly you have 20,000 calls in the money. And now the market maker has to go buy more calls. And then by buying those calls, they put the next strike price in the money. And that causes them to have to buy more calls. And this loop keeps going until enough calls run in the money that it causes a combined gamma squeeze. That's what this is. This is creating gamma, because as these calls go in the money, that increases their gamma value. And this is a concept in options trading that you would have to go and look up yourself, because it's a little bit complicated. I don't want to, muddy the waters here. But that gamma increase, it causes the value of those calls to increase very, very rapidly. And as they're going in the money, as they're going further in the money, that increases their delta value. That's their intrinsic value. That's the value of the shares that you're allowed to buy with those calls. So imagine that you have this situation where you have this ramp that goes up even further than this. And this process, this situation can continue further and further. Okay? So now I'm going to show you the actual gamma ramp for GameStop, which is right here. This is the actual gamma ramp for GameStop. And over here on the left, this is the percentage of its float. That's the total floating shares that are traded in the market. That's how much of these would be in the money. That means that this is the percentage of the company, GameStop, that market makers combined would have to purchase shares of in order to deliver those shares to whoever bought all those calls, right? So as the market price goes up, more and more calls go in the money. A bigger percentage of GameStop's shares must be purchased by market makers to deliver to whoever owns those calls. And this is a gamma ramp that goes from December the 9th till December the 30th. So just for this month. That's All that this is just for the month of December. So when you look at this giant exponential ramp right here, what this is showing you is that at $30, somebody has to buy more than 20% of GameStop in order to cover all of those calls. And that's why that $30 level is so critical for GameStop. And that's why you're seeing institutions fighting it so hard, because they got a lot of money on the table. And it's not just their money. They know that other institutions are short GameStop. So they're feeling confident right now, right? They're both confident and scared. Because one, they're confident that there's a lot of other institutions betting against GameStop with them, but they're also scared at the possibility that if the price did go up to $30, they would not have enough cash to cover this. Eventually, it becomes mathematically infeasible for institutions to cover this amount of shares, because at a certain point, there's just not enough shares in the market that people are willing to sell at these prices for them to cover them all. And this is what causes a gamma squeeze. And then you add into that fact, let's go look at GameStop's short interest for Ortex. Big shout out to Ortex for working with Hell's Trading Floor and giving us this data. I seriously don't know where we'd be without these guys. So GameStop has 21% of its total free float sold short right now. And that figure has been rising month over month since about August the 18th. We've had, ebbs and flows in the short interest for GameStop. But on the whole, if you go all the way back to the beginning, since the big short squeeze, GameStop short interest has only been going up. And you'll notice that the days to cover are all the way up here at 18.6 days to cover. This is a huge amount of days to cover. If you're not familiar with that term, it just means that based on the current volume, if all shorts tried to cover their position, it would take them 18 and a half days to completely cover their position based on the monthly average volume. And just to point out, the days to cover, back when GameStop squeezed the first time, it was only 4.45. So right before GameStop squeezed, that's how many days it would have taken for shorts to cover. And sure enough, like about 2 weeks later, GameStop just took off for this freaking moon, man. So putting all of this data together, we see that right now, GameStop's gamma ramp only shows about 2.4% of the float in the money right now. At the current market price of $22, anywhere above $22, 2.4% of the stock is in the money. But if the stock goes up to $25, that jumps up all the way up to around 10 or 12%. You get that back up to $30, more than 20% of the stock is in the money. You get that number up to $50, and you're all the way up at like 42, 44% of the stock in the money. At a certain point, it becomes infeasible. As a matter of fact, mathematically impossible for hedge funds and market makers to buy enough shares to cover all of these. And that's why if this price action does take off and you see GameStop going beyond 30 at any point this month, that's a huge screaming buy signal. I have alerts all over GameStop to let me know what the heck is going on with it at any given time. So this price action that you're looking at on GameStop, like don't let this scare you, because it is a psychological tactic of institutions to try and entice retail investors to give up their shares and give up this play. This is how the stock market works. Everybody is in this game of chicken, okay? Whenever you enter into a stock position, no matter what, you tie yourself to the railroad tracks with somebody else who is betting against you. And one of you has to be the first one to leap off the tracks. This does not. No, Peter, don't mistake the days to cover for saying that it'll squeeze in 18 days. That's not what that means. It means that if shorts had to cover all their positions, it would take them 18 days to do it based on the current volume. It is not a time. That is not a time estimate or anything like that. Yeah, not worried about AMC or Apes float. We're just talking about GameStop for today. But don't worry, we'll cover the rest another time. So that pretty much sets us up for where we're currently at with GameStop. The week's not over yet. We do have this candle, which is threatening to close below its 200 period weekly EMA. But every time that we have cut through this 200 weekly, there's always been a really strong bounce. Every single time, big bounce. And then a couple weeks later, GameStop is just taking off for the stars. So just be patient. Hold on to your convictions and just wait it out. This volatility will turn around if GameStop shareholders have faith in the company. And to be honest with you, like the earnings were like they weren't great. They missed, obviously. But it wasn't a disaster. And the share price is holding up right now in post-market. So most of the selling that occurred today, well, actually, most of the selling that occurred over the course of the last week, this is where most of the price pressure came from, was a big sell-off from institutions going into earnings. Most of this price action, all of this big selling action, was all from predictions of a bad earnings. And it wasn't really that bad. It just wasn't that terrible. The last time that we touched this level was back here on the 8th of November, and then we gapped up before market open the very next day, and it had already gone up by 14%. So, just saying. Yes, I would actually like to point that out. Thank you, Neil, by reminding me of that. But yeah, GameStop did actually have some really positive notes in its guidance. For one, they're not exposed to crypto or NFT risk. They already stated that. They said that they do not hold any crypto assets whatsoever. So that's actually a good thing because the whole market is really nervous about crypto assets at the moment. And everyone's like thinking like, oh God, GameStop's so exposed to crypto. Like they're all over the crypto space. They must be. And they just stated like, no, factually, we actually divested all crypto. We don't have any involvement in the crypto space. So there's none of that happening right now. So the actual equity value of GameStop right now, none of it comes from the value of crypto. And that's a big deal because everybody was speculating that like Ethereum was one of the big things that GameStop was holding on to because of like ETH token assets or like a derivative ETH token for GameStop being created. People were talking about GameStop creating a whole bunch of NFTs, but like they created the NFTs as a novelty and as a way of like generating revenue. They're not creating NFTs like as an investment, trying to build equity with a bunch of NFT tokens or anything like that. So everybody who is like terribly afraid of Ethereum continuing to sell off and and Bitcoin continuing to sell off, which I have to be honest, I share the fear that crypto is going to continue moving to the downside. Things are not looking good for any of the crypto coins right now. But all that aside, because Wall Street is worried about crypto, if any company is massively invested in crypto, Wall Street will be worried about that company. And GameStop said very plainly, we are not invested in any crypto at this time. So that's an excellent piece of news for GameStop's outlook because it adds faith that their assets are not held in some kind of, bogus derivative or any expectation of like a major crypto squeeze or, speculative investments. They're very risk off right now. So they're focused on getting their earnings up, getting their e-retail systems fully up to speed and taking care of their debt, which is what's important to their fundamentals right now. Look, I'm not going to get into all the arguing over like DRS or any of the speculation over how much of the float retail owns. That's much less important to me than just fundamentally what is valuable about GameStop as a company. Fundamentally speaking, the company is still undervalued, and you may have your own opinions about Ryan Cohen, but as a businessman, he's been very successful in his career. And I don't think there's really anything that he's touched that hasn't given back some pretty big returns. So ultimately, like, I know that the Bed Bath & Beyond situation was a massive disaster. People are really upset about that. But like Ryan Cohen played y'all. The Bed Bath & Beyond investors like got rugged really hard by Ryan Cohen. That's a ruthless business decision what he did. But as far as GameStop, like he's a major owner in it now, and that is his decision to be chairman for this company. So at the very least, by virtue of his ownership, he wants this company's value to increase. And that's the one thing that you can trust is that he wants to see GameStop continue to increase in value, because if it doesn't, he loses money. So treat this as it is, that this is all about money, because this game, that's all it is just about money. At least for the people at the top, because this is their game. This is what they do. They're just worried about making money. So if there is a money-making opportunity here, be absolutely damn sure I'm going to be looking for those opportunities for myself. And right now, GameStop has good technical setups for a double bottom right here, which if you go back to the weekly and daily charts, is part of a triple bottom setup. We have a very clear, heavy floor, a big level of liquidity, all right here. So the chance that GameStop bounces off of this level is very good. And that is just the technicals. That's all it is. Yep. Exactly. The bullet point is that any triple bottom is an excellent buy signal. Very good buy signal. You may have to wait some time. We're talking like could be 3 or 6 or 10, 12 months before you see a return on your investment. Because this is, after all, a triple bottom on a weekly time scale. But it is still a triple bottom. So if you just play your cards right and play it according to a valid strategy, such as if we take a date range from the first bottom all the way to this bottom, that gives us a 266 day time frame. So the theory would go that this triple bottom should be more than played out completely by the end of August, according to this. So the expectation would be that the triple bottom would be done playing out and return back to its last high at approximately $48 per share by the 28th of August. And that's just a technical forecast. Okay? So those are the technicals for GameStop. It's got a good setup on a technical triple bottom. The weekly chart looks really good. It's got nice big thick support on the 200 period EMA for the weekly. The daily is still looking pretty good. It's been trying to fight through its 50 period EMA, but we got a nice double bottom getting ready to form right here. What we need is a confirmation candle for a bounce. So you've already got the double bottom setup ready to go. What you need is that one candle bounce back right here. So we need to, honestly, like what would really be good is to see a green engulfing candle right here. If you get an engulfing candle, that's where a green candle, the body closes, like say tomorrow. If you get a close immediately above 2350, then that is an excellent technical bounce and a definite confirmation of a double bottom right here. And then you would just, if you're just playing the technicals, you would play that for a take profit of $28.75, give or take. I don't see an inverse cup. No. If you're talking about this, the tail is too long. This created a consolidation channel. This is not an inverse cup. It's gone on too long, and the support went on for way longer. This has created way too much support here for this to be an inverse cup. If you're talking about right here, I guess I could see that. Like that could be an inverse cup. But given that you have this high here, I actually think that this might be part of a bullish harmonic. Let me turn on my harmonics detector. Nope, didn't find it. Sometimes I get those harmonics. But anyway, I don't think that this is an inverse cup. Oh, it did find this harmonic on the hourly. Oh, that is it. That is it. It did detect a harmonic. Okay. This is exactly what I was looking at. All right, so this is a shark cipher. I love this indicator, by the way. If you're not familiar, this is the harmonic patterns version 2 indicator. I love this thing. Harmonic patterns are very accurate. Very, very nice indicator. All right. Well, we can't cover everything all day. I think that that's everything that I have. I'm going to give you guys 5 more minutes. Ask me anything that you want about GameStop. I'll happily answer any other questions that you have. Got like 5 more minutes. 4 more minutes. But this is all I've got for the earnings call for today. So far, things are looking pretty good. What's the pink hands for? Will there be an IV options crush? So if you're asking about IV crush probably already happened this week. Because you had this straight sell-off. Like take a look at this this RSI. When you see the RSI do this is IV crush happening also. It's not like it's not like one's causing the other, but this is just like whenever you see this strong of a move happening with the RSI going straight down like this, IV crush is also happening at the same time. So all the options that were bought like at the money, in the money, like any option, any call option anyway, that was bought in this zone, like these strike prices, those got IV crushed badly. But anytime that you see like a sharp move to the upside, this is going to create IV. That's implied volatility. For those of you who aren't familiar, IV is the implied volatility based on the rapid increase of options premium pricing. It's basically whenever the stock starts going up really fast, the implied volatility starts going up because people start trading it more erratically and volatilely, and there's a widening of the spread that happens. That's the difference in the price between bid and ask. So IV implied volatility going up usually happens during extreme price action like this. And then the IV crush is what happens on the other side when the price action goes way back down. And then everybody that bought call options that were in this area and then held onto them, they paid very, very high premiums for them, generally speaking. Because as the price is going up, people are buying at the money options. So when the price is trading at $30, people buy $30 strikes. And when it goes up to $31, people buy $31 strikes. And as the price is going up, the premium is getting more and more expensive. And then all of a sudden, when the price stops going up and it just goes, just dies, that causes all of those options to go worthless very quickly, or at the very least decline in value so quickly that you wish you had never bought them in the first place, because it'll lose like between 50 to 80% of its value in just a single candle. Sometimes it gets so extreme. That's what IV crush is. That's why people say you have to be really, really careful about buying call options during upward price action that's super extreme like that. Because when you do that, you're buying high volatility and you're paying more than the option is probably worth. So that's something to be really cautious of when you're playing these kinds of extreme volatility plays. You need to get in and get out very quickly during that upward price action. If you wait too long, then it doesn't matter if your call's still in the money. You'll still lose cash. You'll still lose value on the play just because of IV crush. And it's really devastating. Yeah, leaps on GameStop right now are probably pretty good. I don't have the numbers in front of me. I could go look at bar chart, but this is going to be the last question that I respond to, because I do gotta go. I'm sorry. Thank you, Scrap Queen, for the question. I'm gonna go take a look at the options market overview, GameStop. We'll take a peek at bar chart right now. Bar chart changed their layout. Is it price history? Just want to go look at options prices for GameStop. They changed their layout. Sorry, guys. I got to figure out what changed here. Maybe if I just click into one of these. Okay, yeah. Stocks, quotes, overview. Change the URL to GameStop. All right, that didn't really help me. I just want to see the options table, man. Why is that so hard? So, somebody save me from myself. I feel stupid. I feel like I'm making myself look stupid on camera. Let's see. Geez, where did the options data go? Here we go. Options prices. God, such an unintuitive interface. It's just so much data. Okay. All right, yeah. So here's the weeklies on GameStop. The IV is super high right now. Like, it's still really high implied volatility. You get way better prices if you go out to like the end of December or January. Yeah. Yeah, the IV is way better out here. It's still not great. Generally, you want to buy during really low IV, like below 80%, but GameStop's never going to see that just because so many people are speculating on weekly options and just gambling and not really putting much thought into their decisions. The implied volatility on weeklies are just super ridiculous. Oh, I'm sorry. I've got the wrong screen up. Thank you. Sorry about that. There we go. We got it. My bad, my bad, my bad. So, like I was saying, the monthlies for January look way, way, way better. Because like right now, if you look at the weekly, pay attention to like $25 strike, okay? The last traded price is $2.55 per share. That's $255 for a contract. Right? So pay attention to this price. I'm going to jump all the way back to the weekly price for this $25 call. So $25 call, that's $80 for each of those calls. That's still ridiculously expensive. You can base this based on the IV. This thing is more than 3 times more expensive than it should be. This is 3 times higher IV than that other option. So a more reasonable price for this call option would be closer to like $28 because it's so far out of the money. So really, like this is a dumb price to be paying for this option. It's way, way overpriced. So keep an eye on IV. IV tells you a lot about what pricing is doing for these options. If you're seeing IV that's like in excess of 180%, don't buy it. Like there's just no reason. There just isn't. Go out by by a couple of weeks or even a month or two, and you'll find the IV comes way down. This is much more realistic. Like just going out till the week of the week after Christmas. Just going out to the week after Christmas, you're only paying $95 more for the same strike, and you're giving yourself 4 weeks. You're giving yourself 4 weeks for the trade to play out for less than twice the cost. That's how stupid IV can be. Be really careful buying high IV options. Hey. Persephone is right. Rule number 1 is no full porting ever. Never, ever, ever full port anything. I know you guys are having fun, but like, be serious. We got new people that come in all the time. No full porting anything. Okay. So anyway, that's going to be it for this one. You guys keep an eye out on these, okay? And like I said, pay attention to IV, okay? Because if you're buying high IV, you're paying more for your option than it's worth. Go out to further expirations and strike prices, and you'll find better deals on this. Implied volatility is way, way more approachable than you think. If you see a really high number, like over 150%, you're paying more for it than you should. Go out a few weeks and you'll find this number coming down. Okay? All right. That's going to be it for this video today. Thank you guys so much for joining us on the stream. I'm sorry that it was such a short earnings call, but if you are coming to this late, be sure to check out the beginning of the video. We came straight into the earnings. It was a super, super short call, but we went straight into the analysis and kind of picked things apart and gave everybody a quick TA session to figure out where we can expect GameStop to look at. Keep an eye on that double bottom strategy that I pointed out here just today that has formed in the last couple of weeks. And also don't forget, on the weekly, we have a triple bottom with a very, very strong range with upside that could take this price all the way back up to $35 in relatively short order, less than 1 year. So keep an eye out on that. And yeah, mark your charts up and make sure that you're using those alerts to your advantage. If you like this interface, just remember that this is TradingView. This is what everybody at Hell's Trading Floor likes to use. Excellent, excellent trading software. And if you want to get access to it and you want to help out Hell's Trading Floor at the same time, please consider clicking the link in the description for our affiliate link to TradingView. If you purchase a subscription to TradingView, a small portion of your payment goes directly to Hell's Trading Floor to support us and what we do to help educate people and give you access to new and important stock analysis resources. That's going to be it for today. Thank you guys so much for watching, and I look forward to seeing you next time. But until then, have a hell of a time in the markets.